Can start promptly at 6:15.
We're ready.
Why not?
You're on.
Do we open this as a regular council meeting?
Special.
Hmm?
Special.
Okay. I apologize for the
That's me that has to
moderate
apologize.
delay today. But we will open the special council meeting for the City of Cross Lake on Monday, April 13th, 2015. We are assembled to hear the audit report from Clifton, Larson, and Allen. We probably should also introduce our new chief accountant, right?
Yeah.
Auditor.
I am Mary Reedy, the principal on the audit. So I got to wrap things up this year. Normally you see a gray-haired man. Tonight he is no longer here.
I'd rather see Mary, that's fine.
There you go. Okay. I presented a PowerPoint a few years ago, and then we've just kept it going. All of the numbers within the PowerPoint come from the audited financial statements. If you flip to the first slide, just a brief outline of what we'll go through. But feel free to stop me at any time with questions. I know sometimes it's easier to go ahead and ask the question while it's on your mind than to wait till the end. No really formalized process, and I'll go through whatever the council would like me to. So we'll start with the PowerPoint. Some required communications, audit findings, financial results, and then some key issues and summary items that came from the audit. Okay. So the required communications, our primary responsibility as auditors is to provide an audit opinion on the fairness of the presentation of the financial statements in front of the council. We do review internal accounting controls, so we sit with management and go through those. We see what controls there are supposed to be, and then we also walk through them and see if they're actually working. If we find any controls that aren't working, we will let the council know that. Risk-based audit approach, we can't test every transaction, so we do some detailed transaction testing and then some detailed analytics and things like that. And then we also sit down with a council member and management and some employees and get their thought process on fraud within the audit. And then if anything comes of that, we do additional detailed testing in those areas. Okay. Any significant accounting policies, those are all outlined in Note 1. And there were no significant changes from the prior year financial statements. So if you compare this year financial statements to last year, they will be comparable. Okay. It's page 4. Within the financial statements, there are some management judgments and estimates in there. Useful lives of capital assets, how long will they be around? Current versus long-term compensated absences, not sure when employees are going to leave, if they'd be current or long-term. If there were any corrected or uncorrected misstatements, we would have to let the council know. There were none of those. Page 5. If there were any disagreements with management, we would also have to bring that to council's attention, and there were none. Okay. No other consultations with any other accountants. Okay. Page 6. Any difficulties encountered in performing the audit? There were none. Mike and Sharp put us at the top of the list and get us in and out. We do communicate and reference the auditors of the Cross Lake Communications, and we did speak with them up to the report date for the city. And so page 7. So the city's audit results, and unmodified on the financial statements to be expected, meaning a clean audit report. Just one material weakness noted, segregation of duties. The city just isn't quite large enough to separate all of the internal accounting functions. So what that means is we rely on the council as well to be reviewing that financial information that comes, the expenditures, the revenues, things like that. Okay. Minnesota legal compliance, we test 7 areas, about a 25-page checklist to make sure that the city is in compliance with all laws and regulations, and there were no findings there. So good, clean audit report for this year. Page 8, we'll get into some numbers. As in the past, we present these government-wide, so all of the funds combined, and then we go ahead and take out the communications fund, just so the council can see the difference if the communication fund was out of there. The communication fund is a fund of the city, so it kind of skews these numbers. So page 8 is the total assets and deferred outflows for 2014. So this includes the communication fund, and then page 9, you take out the communication fund. So nothing too significant there, just an overall decrease in total assets. A drop from last year, if you were to look at last year's PowerPoint, the current assets had refunding bond proceeds in there. And that refunding bond was paid for, which dropped the assets. Then you'll see the corresponding liability amount drop as well. Okay. So on page 10, total liabilities in that position. So you'll see the total liabilities number dropped from last year as well. And page 11 is just without the communications. Like I said, they're not a big change in the pie chart, just the total amount goes down. Okay, it's page 12, total net position, the breakout. This is everything included. So net investment in capital asset, what does the city have invested in those? Net of any related debt, it's $15 million, 77%. Your unrestricted at 3.3 is the yellow piece. That's 16%. So unrestricted meaning the city has that money that can go towards operations. So then page 13 is less communications. And you can see the unrestricted piece goes down by about 3%. And your net investment in capital asset increases without the communications. Okay. Page 14 then, where is the money coming from? So this is where it really gets skewed. With the communications being in here, you can see that charges for services is 57%, and a significant piece of that is going to be the communications. And so if you turn to page 15, then it shows, okay, what revenue sources the city has without the communications. And you can see that property and other taxes jump up to 74%. Once again, this looks different from other cities as well, is because obviously the city of Cross Lake doesn't get LGA like many other cities do, so property taxes
Doesn't what? I didn't catch that.
The LGA. So most of the time on a other cities, you'll see governmental revenues be significant, whereas now you're heavily relying on property taxes. In total expenses, you can see that communications is 48% included. And on page 17, you take it out and a little bit better idea of what the actual expenses are for the city. Nothing of significance here, kind of what the city would expect to see. On page 18, we get to just the general fund. You can see the dark blue line being total revenues, the pink line total expenditures, and then the green of fund balance. So you can see this year, revenues and expenditures were right on. And then with your net other financing sources, the blue line actually increased fund balance a little bit in the general fund. So you don't ever want to go too many years where your expenses are over your revenues. That means you're draining the fund balance out of there. So page 19, what is in fund balance for the general fund? You can see about 87% is unassigned. Assigned for capital outlay, about 12%. Non-spendable, prepaid is what has the city paid in advance. So that money would be gone already, is about 1%. Okay. Page 20, just the general fund, and where are the revenues coming in to support the general fund. So this is where your really small piece of intergovernmental at 4%. Versus your property taxes at 75. So if you look at page 21 then, general fund expenditures. A little bit of a shift from prior year. Public safety was at 17% last year. Public Works was at 13%, and then capital outlay last year was at 24%. So capital outlay down just a little bit from last year. Page 22 is just the communications fund. They did have negative net cash flows again this year, and you can see that they had a net loss as well. Net loss for the past at least 5 years, probably going back a little bit further.
Question. You said the communications company had a negative cash flow?
Correct. Communications about 114,000. If you look at, do you want to in your financials?
What page are you on?
I was on page 24. I guess I could just set it up here. Sorry. So this far left column here. So a positive $1 million from operating. Transfers to other funds, which would be the city. You get negative 275. Purchase of capital assets, interest paid, and principal payments leaves you with negative 780. And then net cash provided used by investing activities. And then when you add all of those categories up, you get a negative 113,642.
That includes the transfers to the city of Cross Lake.
Correct. Yes.
I got it.
Yep, that's 277.
I got it. Thank you.
Okay. So then page 23 gives the sewer fund. And you can see that the net loss has gone up, I guess you would say, which means less negative. And they actually had a positive $74,000 of cash flow. So not quite funding depreciation, but at least generating a little bit of cash this year. Okay, and that cash flow would be on the same page as the communication, page 24. Page 24, we do present the EDA as well. Two funds combined, the revolving loan activity and then non-revolving loan activity. The revolving loan has principal and interest, so principal on loans that have been made along with interest collected. And then non-revolving loan would be any taxes collected for the EDA activity. So expenditures, there was one new loan of $100,000, so there'll be principal and interest payments coming in from that. And then non-revolving loan activity for expenses, payment to the city, consulting fees, and then just a few other miscellaneous items. Page 26. The general government expenditures by department. So we get into a little bit more detail of the general fund. You can see the different categories. Elections will only come about, obviously, in election years. Audit and legal went down from last year, along with planning and zoning. Other than that, nothing significant. Page 27, public safety expenditures.
This last chart, we're just on page 26. What does that correspond to in this book
Okay.
over here? You don't need to show it, but just tell me. I can write a note on it and I can go look later.
Okay. This is best broken out when you go to your budget to actual statements, which is going to be on page 54.
54. Okay.
Yep.
I'll look at it later.
Okay.
Thank you.
Okay. And this will come from the same page. Slide 27, the public safety expenditures by department. So what piece was fire and police? Page 28, public works. Piece of that is engineering, and then the public works maintenance. Culture and rec by department, so there's library and recreation. Library at 16% and then recreation at 84%. Page 30, the audit is required to be submitted to the state along with the state reporting form. That will be done well in advance of the June 30th deadline. We discussed sewer and communications fund had negative change in net position. General fund had a positive change in fund balance. That was, if you look at the financials themselves, it was due to the transfer in from the communications fund. So keep that in mind as you're reviewing the communications fund, that is helping support the general fund at this time with that $270,000 transfer. And then if that did go away, I guess there'd have to be a give and take there, either increase taxes or some offsetting revenue, or look at the expense side. Tax increment financing fund had a negative change in fund balance just due to a transfer to general fund, excess TIF one-time payments, and it's still where it's supposed to be, and it's running how it should. So there's no concern. Okay. Capital outlay in the general fund, approximately $650. There was a fire truck purchase this year The County Road 3 payment was paid. And then there were some squad car and some cameras added as well. Debt service fund is holding its own. Taxes and special assessments are covering the debt service requirements. The general fund has slightly over half a year of expenditures and unassigned fund balance. State auditor recommends between 5 and 6 months fund balance, just because the city relies heavily on property taxes, and you don't get those until May, June timeframe. And so the city has to have enough operating cash to make it from January to that timeframe. We'll talk about the debt service fund. Enterprise funds, we talked about a few of those. The communications fund is covering about 3/4 of depreciation at this time. Same with the sewer fund. And just continue to monitor the rates for the sewer fund. I know this has gone back and forth. We'd like to see it cover depreciation. You definitely like to see a cash flow so that the general fund and things are not supporting the sewer fund. It should be operating on its own and be able to sustain its own.
Question? It says the communications fund is covering approximately 3/4 of its depreciation. Is that correct?
Yes, correct.
Is that after the city withdrawal?
Correct.
Okay. It would be almost 100% if we didn't do that.
It
right?
actually would be 100% correct if you
Right,
did
it's
not.
very close. Yeah,
Yeah.
okay. Thank you.
See, the sewer fund is also covering approximately 3/4 of the depreciation expense.
Correct.
So we don't get any money from there.
But,
Right,
Is that-
which has been a.
so they're both at about the same, and that's a normal amount, or is that considered reasonable? What do you?
The sewer fund, usually, we'd like to see that covering the depreciation. I know you have to outweigh, benefits and things, but it's just saying that when you come time to replace things and you're not fully covering depreciation, you're not gonna have that cash flow to fund replacing items. You're gonna have to probably bond for it.
Are there any reserves left in the sewer fund left from the construction?
I
There
don't-
was until a few years ago, I
Right.
know.
I look again, I'm not sure, no. Mike says no.
You say none? Okay, fair
No,
enough.
it has for years drained the cash from there.
Mhm.
And we,
When do we run out? When do we run out of reserves? How long ago, in round numbers?
You basically ran out of those reserves the year after you were done with the project. They were just never moved over. So once you have a construction project, the construction phase is over. And by definition, if you have a revenue bond with it, and correct me if I misspeak, but any funds not spent for the construction go to pay for the debt. And so I look back and there've been enough repairs, and I think Ted would vouch to this. Nod your head, Ted. He's nodding his head. That there's been enough repairs in there. I mean, there was like $16,000 left. And so when you're looking at the sewer fund, you've really got two issues. We talked a little bit about depreciation. On an operating basis, yes, you're cash flowing it on depreciation only. We're not building any reserves for replacement. Typically, when you have a sewer fund, you build into your rate structure fees so that, number one, it supports its operations, and it sets a little bit aside for general maintenance, and sometimes even for a capital fund for repairs, depending on how the bond is structured. In this case, you've got one other component there. You've got debt service. You're levying about $220,000 a year for debt service that the city is levying over all of its residents. So there's two pieces to that. To cash flow it, if you think of it in terms of how could I make it pay for itself, the first thing you'd have to do is generate sufficient funds from the operation to cover the debt. And right now, as an entity, we've chosen not to do that. We've chosen to levy for that debt. So over about the next 8 or 9 years, there's about a little over $220,000 a year that you're scheduled to levy for debt. So I can see people doing math in their head, which for me is always dangerous. So what you can do is, if you think about it, you have 340 connections, something like that, and you're levying $220,000 a year. You back off that math, it comes to a little over $15 a month that you'd have to change your rates to cover 100% of that debt levy. Now, we know that's probably not reasonable, so when we're looking at rates, you know, we want to be thinking about, if we hadn't had an adjustment to rates, it's probably something we should look at. So,
If I look at the chart on page 23, and you look at the sewer charge bar, it appears they've been flat for, or no change in rates
no, there hasn't been a change.
for,
There's 2 years ago, I
Yeah, 2 or 3 years ago was the last change that was done.
oh, okay, okay.
And it wasn't very much of a change, it was.
Right.
$4.
Well,
Are we competitive with other,
And I think that's why there hasn't been, is because the council has gotten pushback that you're already pretty high as is. And so that's why I brought out this page of the financials, page 23. Because normally what you would see is your operating revenues minus your operating expenses, and you would expect this to actually be able to run itself, so be a positive number. Where Mike is talking about is your property taxes right here is making up for that difference at this point.
and that's spread over the whole community, is that not
Correct,
right?
not just the
Okay,
users,
no,
right.
we have a few issues like that, but that's, I don't mean to draw attention to it. But it would be great if we could serve everybody on both sides of the street where the mains went. We don't have the population to do that.
Exactly, because you get more users, obviously, you would generate
Yeah.
that much more income.
But the problem is, in order to get more users, we got to build more
Right.
sewer main, and we probably don't gain on this very much. But you've got to remember that this is also an environmental issue, so,
Exactly, exactly.
okay. Thank you.
So we're going to come to our last slide. So a quick presentation. Like I said, all of the information came from the financials. So if there are any detailed questions on the financial statements, I'd be more than willing to address them. Everybody comfortable with the financials? I don't know if you wanted me to walk through it quick or okay with how it's worded.
Well, you've got 15, 20 minutes. If there's some things you think that we should be aware of or be highlighted for us, that would be most appreciated, Mary.
Okay. For some of the newer council members, page 4 of the actual audit is what they call management's discussion and analysis. It just gives you a quick read instead of looking at all of the numbers. Kind of gives a synopsis of what happened during the year. A little bit more readable and understandable terms. And it is written by management. Mike reviews this in detail and adds comments to it as well. And just it walks through all of the high key points of the audit. Has a few graphs and charts in there as you turn. It goes through page 13. So like I said, it's a little bit easier to read than the actual financial statements themselves. The general fund budget to actual is in the back.
I got an old question for you. Can I ask an old question
Okay,
that probably hasn't been asked here before? If we finance a capital asset, first of all, we generate a depreciation schedule for it, so we depreciate it, right?
correct.
And then we got to pay off, and we financed it, so we got to pay off the loan. How much of that payoff ends up on the expense side of this whole transaction? All of it?
Depending on,
Paying back the capital, paying back the original principal is not an expense, is that right?
depends on what fund you're in. If you're in the sewer fund, no, that's where cash flow comes into play.
Now, let's talk about the
Governmental?
debt for a fire truck.
Okay, so the debt for the fire truck comes in and it gets expensed. The actual purchase gets expensed in that year. And then every year, as you make payments on it, it offsets, the revenue is recorded at the same time. So when you purchase a fire truck governmental, you have capital lease proceeds. And then you have the purchase of the fire truck. So basically it nets to zero. Okay? Now, the next year, when you make payments on it, it is an expense. The principal and interest shows up as expense. But what you're missing is the actual capital asset, 'cause there's not booked on the governmental fund statements. That's why we do government-wide statements, and on the government-wide statements, you are correct, that principal would not be an expense.
We're also depreciating it.
Correct, on the government-wide statements.
Hi, Mike, old number guy.
We try to help.
In other words, I'm wondering if we're not being a little tough on ourselves. That's, I didn't want to use that term.
No, you really aren't double counting it, because what happens is.
You
in
really
a
are?
governmental- No, you're not. Let me
Okay,
explain. In a government-type situation, you're focused on current spendable resources in the old days, the way we used to do it. That's pre-GASB 34. So what happened, as Mary explained, is you would issue, let's say, $500,000 of debt, whatever kind of debt that is, to buy an asset. So you'd show revenue of $500,000, and you would show an expense of $500,000, and you have the asset. So what would happen in year two is you'd make a payment. Let's say you're levying $150,000 for it. So you'd show revenue of $150,000 for taxes, and you'd show expense for $150,000. And so what happened with GASB 34 here, I don't know, 10 or 11 years ago, when it became effective, is everyone said, that's confusing. I'm used to seeing a business financial statement. Why don't I put that asset on my balance sheet and depreciate it? So we said, okay, let's go ahead and do that. And then, do we have the page in here where we show that? There's a bunch of conversion
Yep.
entries. And we're going to show you a page in your audited financials that say, you know, what would we look like had we treated that asset originally as though we were a boat dealer. We bought that boat. How would we treat that originally? So we go through this conversion process to say, here's what our fund balance would look like if we made that change. Okay? And so I can see most of that, but on the top there, you see the fund balance. That would be your fund equity, as though you issued debt and bought that whole asset all at once. And so all the stuff below that, on that second line there, where it says capital assets used in governmental funds are not financial resources and therefore not reported in the funds. So in layman's terms, that means we have to pick them up as an asset and depreciate it. So in one set of statements, you're showing the acquisition of the asset. And once you've done that, when we make these conversion entries to say what would we look like had we done that as a for-profit business, we're showing the impact on our position. So your comment to say we're double counting it really isn't correct. we're accounting it in two different places,
Okay.
under two different accounting methods would be the correct statement on that. And there's other things in there too that we do that with.
Thank you, Mary. Thank you, Mike.
You want me to talk
What
about-
page is that you're on right there?
Page 18.
18, all right.
Yeah, it's 16.
Mike did remind me that there is a new standard coming out, another one, GASB 68, which deals with para and the shortfall of para funds through the state. And what the state they've already done is they've calculated how much their liability is to those drawing para. So city employees, they contribute to para, and the city matches that payment. And when they retire, that's their retirement fund. And so GASB 68 now says that any portion of the unfunded liability has to go on everybody's books. So the state is calculating, divided by each city, each government that contributes to para, what piece is allocated to those entities. And so it'll be brought onto the city's books government-wide. It's just another addition to government-wide, as we were talking about. So it won't be fund level. It's not a current financial resource or liability by any means. It'll go government-wide, and it'll be on as a liability. And at this point in time, the city isn't required to fund it. It just has to go on as showing, okay, this is the liability, the difference that para doesn't have for those city employees.
We fund our own employees, correct?
You-
Based on what I'm seeing, we're funding para. Here, matching.
You are matching, correct.
There we go.
But based on the contributions and the employee side of it, you will have a liability on the books.
Oh, I see
You
what you're
shouldn't-
saying.
so-
The short amount of time that we don't contribute that, it comes on as a liability.
No,
No.
sorry. So para within the whole state is unfunded, like completely. Even anybody, any city because every city has to pay it. And so they pay their fair share. It's just that para is at this time unfunded, underfunded. And so what they're doing is based on the city's contribution, the percentage of it, they're allocating a piece of that unfunded to each entity that contributes into para. So actually, you'll see it go on to everybody's books.
Everybody's, meaning other cities.
Correct. You will not be the only one. Any entity that contributes to para will have this on their books as well. Kind of like the other post-employment benefit liability that went on. So that'll be a change for next year.
The government, let's see what I want to say. The city government's version of Social Security.
Basically,
I mean,
right.
because when I was in business, we always had to make the employee's contribution and the matching.
And the matching,
Yeah.
right.
And so technically, the only unfunding that went on were companies that were going down and were not
Couldn't.
keeping up with it.
Right, right.
In fact, they not only cheated on their own, but they cheated on the amount they took from the employees as well. I've seen that. Okay. Thank you, Mary.
Oh, sorry. Page 54, you wanted to see how the general fund did compared to budget.
That corresponds to page 26 in the pie chart, right? Yes.
Correct. Yep, it breaks it down by categories. So those categories that we looked at are all on your far left. You can tie those right back to it.
Okay.
And then your far right column is your variance with budget, and then over or under. You can see on page 55, final budget was positive 17,000, and actually came out at 218,000, so a $201,000 variance on the good side.
Under budget. Above it says in parentheses.
Oh,
under.
over.
I'm sorry, over budget.
Over. So the city expected only a $17,000 increase, and actually there was a $218,000 increase. So you were over budget in a
On
positive
revenues.
way.
That's a good over.
A good over, yes. You don't want to see the negatives.
Okay.
I think that was all I had for at least financial statement highlights.
We need to approve this or anything, or are we?
You need to accept it.
Well,
Also move.
Wessels moves to accept the audit from Clifton Larson Allen for the year ending December 31st, 2014. Do we have a second?
I'll second that.
Schrupp seconds. All in favor?
Aye.
Aye. Thank you, Mary.
Thank you.
If I can, Mr. Chairman, is there anything that we can be doing or Mike can be doing to assist you guys further that might save expenses for, through the audit process? I know that, some do their own financials or whatever, so I'm just
Right.
asking.
At this point, probably not. Mike already takes on responsibility of the financial statements. You saw that audit finding did go away. So if he keeps doing that, he keeps preparing his, the work papers that he does, I don't foresee an increase in costs at all. And I know in years past, we have actually decreased audit fees. If you look at past years, we have actually decreased those because so much has been prepared for us. So kudos to Mike, and you can tell there's no audit adjustments, so as you're reviewing financial information throughout the month and throughout the year, you're getting current information, you're getting that good information. We're not coming and adjusting those numbers, so the council knows that they can make decisions off of that information, which is what you want.
Great, thanks. I just wanted to also just mention that I think that Mike and Shar do a great job with our finances, and I think they should be thanked for all their efforts throughout the year, so thank you.
I agree.
Thank you. Thank you very much. Appreciate the work you guys do. I can personally attest for both of them that they help keep me on track, so I thank them for that also.
Now, Mr. Chairman, I guess if there's nothing further, you could recess for 5 minutes until 7 o'clock if you choose to do so.
We'll adjourn the special meeting here at 6:55. We'll reconvene as a regular council meeting at 7 o'clock.